This video is specifically for beginners only, because I'm going to reveal the money-making power of the next strategy in this beginners training series. This is the beginners options trading strategy number 2. Now, just because it's a beginner strategy, don't let the name fool you. In fact, I use this strategy every week as a part of my option trading activities in order to generate an income. For those of you that already know what a stock option is, go ahead and fast forward about 60 seconds. For the rest of you, here's a simple and quick explanation about stock options. A stock option is a contractual agreement. So think of a contract or a document between two parties. In this case, there's going to be a seller of the stock option contract and a buyer of the stock option. Next, a stock option is bound to or refers to 100 shares of stock. The company stock that is associated with the stock option is known as the underlying stock. So for this example, the stock associated with the stock option is for company ABC Incorporated. The expiration date specifies when the option contract expires, and the specific time is at the market closing bell for that day. The strike price is the price that the seller and the buyer of the option agree to use for the execution of the option contract. Now that you've got a basic understanding of what a stock option is, right? It's an agreement between a buyer and a seller to trade an underlying stock at an agreed upon price, the strike price, on or before the expiration date. Now let's take a look at how a cash secure put option contract works. You already understand that an option contract contains an underlying stock, an expiration date, and a strike price. A seller will decide to sell a cash secure put option contract for a particular stock. Now, in order for a seller to offer the cash secure put option contract, they need to have sufficient funds reserved as their collateral. And this collateral, or the money reserved for their collateral, will be used by the seller in case the option contract gets exercised. The amount of collateral would depend upon the strike price specified in the option contract. Now, you understand that an option contract controls 100 shares, so the amount of collateral required would be a simple multiplication of 100 shares times the strike price. Now, in this example, the strike price is $10, and so for this seller to sell this option contract, they would need to have $1,000 reserved as their collateral. After the seller has the collateral reserved, they can offer their cash secure put option contract for sale in the open stock market, where it will be seen by thousands and thousands of potential buyers. Now, if a particular buyer likes the terms and conditions of the option contract, they'll indicate that they want to purchase the option contract. And in order to do so, that buyer will need to submit a payment known as the premium. Premium payment will go to the seller, and in return, the buyer will have the rights to exercise the option contract on or before the expiration date at the given strike price. And the seller keeps the premium received from the buyer as payment for creating the option contract, which also obligates them to purchase the underlying shares if the market price dips below the strike price on or before the expiration date. Now that you have an understanding of stock options in general, and more specifically cash secure put options, it's time to take a look at how strategy number 2 works. So how do you make money from selling a cash secure put? So after the seller sells the cash secure put option contract and receives the premium, let's take a look at what happens on the expiration date. There are 2 basic results or outcomes that can occur on the expiration date from selling a cash secure put option. For the first result to occur, the market price needs to finish below the strike price on the expiration date. And in this case, the option would be exercised by the buyer, and so the shares are now assigned to the seller, and the seller pays for those shares using the money they have reserved as their collateral. Additionally, the seller also keeps the full premium payment that they received initially when the option contract was filled. Next, let's take a look at the other outcome, or the second result that's possible. So in order for result number 2 to occur, the market price would finish above the strike price on the expiration date. And when this happens, the option contract expires worthless. And as a result, the buyer of the option contract is unable to exercise it. The option seller is no longer obligated to purchase the shares. And additionally, the seller keeps the full premium payment that they received for selling the option contract in the first place. So looking at the cash secured put workflow, there are a few things to take note of. First, the seller gets to select the strike price of the option contract, which allows the seller to pick a favorable price that they're comfortable paying for the shares. Next, the seller receives a premium payment in exchange for selling the option contract, and the seller keeps the premium payment forever, regardless of the outcome of the option. And lastly, If the option contract expires worthless, well then the seller is released of all obligations to purchase the shares using their collateral. And the reserved collateral is released and returned back to the seller's trading account. But if the option contract does get exercised, well then the seller receives the shares and pays a price they already wanted to pay for the shares that they thought was fair or maybe even a discount. Now let's take a look at a real example to help reinforce and illustrate how to make money using a cash secure put as the second option trading strategy for beginners. I opened up my account history, and now let's take a look at a transaction that I executed last month for selling a cash secure put. So you can see that I'm selling a cash secure put for symbol RIOT with a $25 strike price and an expiration date of October 22nd, 2021. Now I submitted this order on October 15th, which makes the length of this option contract 7 days. So this is a 1-week option contract. Now it was filled later that morning at 7:25 a.m. Pacific time. Now at that time, the option being paid was 52 cents per share in premium. And when this option contract got filled, I received $52 as the premium payment, which showed up as a credit deposited immediately into my trading account. Now let's jump forward 7 days to the expiration date to find out what happens with this option contract. Here's a daily chart going back almost 3 months, but I want to focus on the expiration date of October 22nd. And just as a quick reminder, my option has a strike price of $25. And now looking at the expiration date, we see that this stock closed at $28.28 per share. So for this cash secure put option contract, the market price finished above my strike price, which means that the option contract expires worthless. So even though the option contract expired worthless, this was still a profitable trade for me. Let's take a look. So using my Picking Stocks for Options tool, PS40, we can calculate my profit on this option trade. I simply enter the 4 variables for this trade, and then the tool calculates my profit automatically and populates the worksheet for me to review. So for this option trade, I input the symbol, RIOT, the October 22nd, 2021 expiration date, my strike price of $25, and the premium I received, which was 52 cents per share. Now on the expiration date, this stock closed at $28.28 per share. And with the October 22nd, 2021 expiration date, that made the length of my option contract 7 days. Now with the $25 strike price, I had to reserve $2,500 as my collateral in case this option contract were to be exercised. But because the option contract expired worthless, I didn't get the shares assigned to me. But if I did get the shares assigned to me, I would have paid $25 per share, which is a savings of $3.28 based off of the closing market price. And that would have been a discount of 11.6%. So that would have been a huge savings, but unfortunately, I missed out on it. Now for selling this option contract, I received a premium payment of $52 when it was filled, and that $52 represents a 2.08% return on my investment of $2,500, which is the amount reserved as my collateral. So this option trade easily meets my profit target of earning 1% per week. So let's walk through a quick recap of this transaction. So I sold a cash secure put option, and in order to sell it, I had to reserve $2,500 as my collateral. And that was calculated by taking the strike price times 100 shares. In return for selling the cash secure put option contract, I received a premium payment of $52, which showed up as a credit deposited immediately into my trading account. Now after 7 days, the market price finished above my strike price, which meant that the option contract expired worthless. And as a result, all of my collateral, that full $2,500, was released back to me and placed back into my account so I could use it for other trades or withdraw it or whatever I wanted to do with it. Plus, I also kept the $52 premium payment that I received. So my new account balance is $2,552. And for this 1 week trade, my return on my investment was 2.08%. I've stated this many times that profitable option trading begins by picking good stocks. And as an option trader, you already have experienced the challenges, stress, and risks of picking a stock to use for your options trading. When investing in trading, it doesn't matter who you are or how much money you have. No one wants to lose money on a trade. To manage my fear, uncertainty, and doubt, I use a simple 3-step process to pick my stocks for option trading. In fact, I'll be hosting a 2-hour YouTube streaming session and demonstrating exactly what I do live and on camera. I'll walk you through each of the 3 steps. I'll share the websites that I use for research, and I'll also show you the tools I use to review and analyze each stock. Plus, I'll show you the exact buttons I push during this free live webinar. So be sure to register for this event so that you'll be notified with the final details, and I'll send you the special link to access this webinar for free. To register, just visit my website, simpleoptiontrading.com/picking stocks for options. If you like the information about my stock picks, then consider joining my Patreon, where I share exclusive videos of my stock picks every week that I'm going to be using for profitable trades. I also include my research notes, stock analysis, and trading strategies for every stock I pick to watch for that week. And of course, all my videos posted on my Patreon are ad-free. There's one last thing before I end this video. Now, making profits and generating an income from option trading is a great thing, but keep in mind that all gains made from trading are considered income and are subject to applicable tax considerations. So every month, I save a portion of the profits that I earned in order to pay for my federal and state taxes. So please consult with your CPA, licensed financial advisor, and or tax preparer regarding the tax liabilities for your unique situation. If you're still watching this video, I just want to say thank you so much. I really appreciate it. And I also want to wish you good luck and lots of success with all of your trades.